Good evening to all. My name is Julian de Salaberry. I am the CEO and co-founder of Galen Growth Asia, and welcome to our webinar for the European and East Coast audience and a few late night owls from Asia Pacific who are attending this webinar to get some of the insights on our very recently, as in this morning, published biannual report on the investment landscape for health tech, aka digital health in Asia Pacific. Thank you for your time. We ran a similar webinar this morning for our Asian and West Coast audience. It was a very large group and a lot of very interactive and many questions. My plan is to spend about 20 to 30 minutes maximum talking through some of the data that the team have crunched together and pull into this this great report, highly comprehensive, and then to open up to questions. The plan is to provide you with a recording of the briefing afterwards for those of you who are finding audio slightly troublesome or who find yourselves in an environment where you need to struggle to hear me. You will also get a copy of this document on completion of this webinar, or certainly within 24 hours, as it says on the slide. I would highly encourage you to share this with your colleagues and with other relevant stakeholders and anyone else you think would benefit from the data that is contained within this document. And I do apologize in advance for any image resolution that may be suboptimal from your perspective. It's probably due to internet bandwidth and various other issues that webinar doesn't create. How I can assure you that the actual slides look absolutely great. It's a high quality product, very much in line with our previous releases. As I said, this is our biannual report. We release it on H1 of every year and then for a full year. And this has become really the go-to reference for investors, innovation leaders within industry and startups, as well as many other stakeholders, as far as understanding the current lay of the land in health tech in Asia Pacific. So very quickly, if you are planning to join the conversation in both social media in terms of comments, be they feedback, be they praise, please, you'll find us on LinkedIn, you'll find us on Twitter, and please use that hashtag as at the bottom of the screen. And if you have any specific direct communication you want to send to us, for those of you who are not familiar with the team or have not met the team before, please use the email on this slide. A little bit about us. I know some of you, I've seen some of you log in, I know some of you know about us, but just wanted to sort of recap for those who are new to Galen Growth Asia. We are a 3-and-a-bit-year-old startup based in Singapore. We consider ourselves as the leading and totally exclusive to health tech research, analytics, and advisory firm. We are totally focused on Asia Pacific, and we serve Fortune 500 companies and global investors. We do so through I focus really on either helping them to design and accelerate strategies. We also spend a lot of time working with both industry and investors, helping them navigate the health tech ecosystem across the whole region. For us, the region is furthest west Pakistan, furthest east China, furthest north Japan, and furthest south Australia and New Zealand, to give you a flavor. And then we underpin that with regular connectivity between all decision makers and innovators within the health tech ecosystem in Asia Pac. We do that in Singapore through, for example, something like our summit, which we run every year. It is the only dedicated decision-making summit in the region, but we also do run events in specific markets. So, for example, we spent some time in Shanghai in China and in Japan, Tokyo earlier this year. Our mission, as it says there, I won't go too much in detail, just to let you know that we are just a little bit over 3 years old. We have we were founded by health tech entrepreneurs who decided there was a need for a platform to bring together investors with corporates, with startups, and help them work together to scale the ecosystem and ultimately really transform delivery of healthcare in the region. Very quickly, in addition to what I just spoke about, we also operate, facilitate, and host a council, which is really a think tank of innovation leaders in industry. We do so because we are of the strong opinion that the health tech or digital health is in fact more of a horizontal discipline rather than a vertical discipline. What I mean by that is that we believe it's a discipline, a capability that cuts through most industrial sectors. And so it's not just one that impacts and should be owned by hospitals or pharmaco companies. It is highly likely that, and we have seen this, that other tech new entrants are coming into the market, right down to oil and gas, automobile, and various other sectors now. So it is very much a horizontal that is maturing nicely and has been driven by multiple sectors. But if you want any further information on that, please feel free to reach out. Okay, I won't drone on about me. Some of you know me, some of you don't. I am CEO of Galen Growth Asia. I am also a co-founder of Galen Growth Asia. We have built ourselves into this position over the last 3 and a bit years. I have an extensive healthcare background, having worked with a number of the large brands, both in Europe, Middle East, and in Asia Pacific. If you need to contact me, then please use the contact details at the bottom of this slide. I'll be more than happy to respond. In fact, I've been receiving emails all day since the webinar this morning, so it's great to see the ecosystem engaging. Okay, today, so as advertised in the email you received as it relates to this webinar, we'll be focusing initially on the 2018 key trends. Then we'll drive into what we believe are some of the major drivers that are creating momentum. And lastly, but just as importantly, we'll look at 2019 and what we believe to be the outlook for 2019. That means that from the agenda on the right, which I won't dive into line by line, but you'll see that we're going to look at deal activity, dollar values being invested, total pipeline, what funding profiles look like, a quick snapshot of some of the key markets. We'll look at the drivers, and of course, at the end, we'll open up for Q&A. So in relation to Q&A, I would encourage you to use the Q&A facility of the this Zoom webinar platform. Feel free to answer the questions. The team are actually on standby looking for your questions, and so we'll respond to your or reply to your questions as we move forward, particularly as they are at the data to hand to be able to reply immediately. Now, also, please feel free to vote up some of these questions, so that will help me prioritize which ones to answer first when we get to the Q&A session at the end of my briefing. But also, I would ask you to try and keep the questions towards the end so that we try and finish on time. It is getting late for we night owls in Asia Pacific. Okay, let's get going. So let's dive into Asia Pacific, the key trends. First of all, 2018. So Asia HealthTech in 2018 has significantly exceeded 2017, and we'll come back to that. And basically, we have seen $6.3 billion US deployed in funding into health tech ventures in Asia Pacific, and that's across 294 distinct deals. Now, what does that mean? It means if you compare it to what's happening in the rest of the world, but more importantly in the US, the USA, or Rock Health, which we believe is our equivalent in our proxy in the US, declared its hand this morning and then closed the US market at around about the 8 billion mark for 2018. Which is an interesting CAGR just south of the 20%. And so as you can see, Asia Pac HealthTech ecosystem closes again somewhat nearer to the US total than it did last year. And so confirming well and truly its position as the second largest ecosystem in the world, and with a CAGR that technically will put it on track to, at some stage, overtake the US of A. So very exciting. There's insufficient data to talk to you about Europe. It's very fragmented and no one is currently collating that information. So I can only give you a comparison versus the US. But it's an exciting time for health tech in Asia Pac. Let's take a little further look at that. So very quickly, letting you know that the full year was a 63.3 billion. It was a record-breaking year. So although the US likes to claim it's having a record-breaking year as well, we can claim exactly the same. That means that really over the last 12 months, we've seen funding grow about 1.5 times what it closed at in 2017. So quite a substantial increase, and double what it closed at in 2016. So really it's on a growth path, a very strong growth path. Just like to point out that we have seen deal volume count itself drop year on year. But effectively, that means that the total, Sorry, I've got something on my screen. Someone needs to mute themselves because I'm getting feedback. The outcome of that volume dropping is that the effective deal size is growing. So that's good news in terms of demonstration of the ecosystem maturing, I guess, getting stronger, but also confidence in investors. And we'll come back to that a little later on. The exit round share, which accounted for about 31%, is also good news. I mean, any investor, any startup founder looking at their position within the pipeline, and we'll come back to that in a minute, is always looking or having an eye on exit. But more importantly, does the ecosystem have an exit profile? And we're very pleased to report that the exit profile of Asia HealthTech as an ecosystem is not only accounting for 31% of the total deal value, but it's also up on last year. Finally, of course, I've already reported that the region's total funding is some 80% of the US. So I won't overdo that particular point. So looking at the pipeline. So what we've done there is we've looked at our data, and we have essentially populated the pipe or the funnel, looking at each startup that we have recorded in our database as at their latest funding stage. Now, the encouraging signs of that is that over 70% of startups in the region are at early or at Series A stage. So it's a very handsome pipeline, one showing a lot of strong promise for the future, and to some extent does indicate or does explain the interest from a growing number of growth stage investors such as Sequoias or B Capital, for example. Conversely, of course, we're seeing late stage deals continue to gain momentum, and that's very important because it's really testament and demonstrative of the maturing of the ecosystem. So we are seeing that movement within the funnel, within that pipeline from left to right. That's leading to two very positive data points. One, we're seeing more mega deals, and so growing confidence from investors, as well as maturing ventures attracting that kind of data. A mega deal is a deal exceeding 100 million. And so that is 16 versus last year's 9. So to give you a real flavor of how much the momentum and the confidence is growing in the ecosystem. Also, coming back to the point that it's important to have exit profile in any ecosystem. We're very pleased to report some 15 exits this year, which is in fact the largest volume of exits ever recorded in health tech in Asia Pacific. So it's a very exciting 2018, setting up really for a strong 2019 in our view, but we'll come back to that. Very quick dive into the mega deals. I really only focus on the Chinese ones here at the moment. The full report, which is now available for free download on our website, contains a great deal more detail in relation to significant deals, and in fact deep dives quite significantly into Yi2 Technologies, which is the fourth one from the left, beg your pardon. Worth though noting that, as you will see, the three largest deals out of China are population health management deals. We believe that is largely and strongly connected with the Chinese government's imperative on its ecosystem to drive down the burden on hospitals of primary care, and doing so with technology. For those of you familiar with the Chinese market, you will know that primary care is delivered by hospitals, and then therefore the patient to healthcare professional burden or ratio is almost untenable. And the Chinese government has clearly understood that technology will play its role in rectifying that position, which is why we're seeing large scale being achieved by startups or ventures now, really rather than startups, like Ping An Good Doctor or WeDoctor. Yi2 Technologies is much more around hospital services, starting to bleed into what we call real world data and leading into real world evidence, but we'll come back to a little later on down the road. Okay, if I then look at it by investment stage, for those of you less familiar with the VC scene, investment life cycle for a venture usually starts with early stage funding, and then its first significant funding stage is usually a Series A, and then as it continues to raise funding, it will then call itself a Series B, a Series C, Series D, all of that until it actually exits either through an initial purchase offering, as in listing in the market, or a transaction such as being acquired by another company. We're saying, though, that we look at this chart very carefully here at GGA, and we know that most of our investors that we speak to look at this chart very carefully, because it is clearly an indication of activity by investors and by different types of investor, as well as a clear indication of, or a test or a temperature check, I guess, as to the maturity of the ecosystem. So there we can see the early stage deals in 2018, or certainly I can confirm the early stage deals in 2018 continue to represent about a third of all funding by volume, so it's pretty steady. We can also see that 2018 recorded 10% more growth stage deals. Now that is a very interesting data point for us, because we believe that that particular data point, if it continues, and as it has done so far, is a very strong indicator that the ecosystem is maturing nicely, safely, and is certainly the reason for many of growth stage, both CVC and VC growth stage funds moving into Asia Pacific and investing in health tech. And of course, as reported before, late stage deal volume is increasing, and that's also a very strong data point. So the green bar in the case of this chart is demonstrative of a very healthy ecosystem as far as funding stages is concerned, funding activity is concerned. And we'll come back to that a little bit later on, but we certainly believe that it certainly is synonymous of an ecosystem that is not frothy, it's not bubbly, it is growing nicely and sensibly. Looking at the same sort of data, but at this stage looking at it cut by quarter, very interesting to note that Q4 saw a significant slowdown in investment versus a Q2 and Q3, both in terms of dollar value as well as actual deals cut. Nevertheless, Q4 did close at 1 billion, so it's not a shabby quarter. Now, we correlate this to two particular data points. One is that the lion's share of VC funding deployed in health tech in Asia Pacific is deployed in China. And we believe that the geopolitical instability, or uncertainty, let's call it that is concerning China trade with the US, for example, mixed in with the potential impact on economic growth of China, has created some jitters among investors in China, and therefore we're seeing a little hesitancy enter into the ecosystem in Q4. Nevertheless, it does mean that we're looking at the last cumulative deal value over the last 3 years to equate to about $14 billion US. So that's it's a handsome amount of money, and one that is welcomed by all startup CXOs in the region. If we set aside the outlier, which is the Ping An Good Doctor IPO deal, which it was roughly valued at $1.1 billion US, and then you'll see that Q2 and Q3 2018 represent two of the largest quarters ever recorded in health tech in Asia Pacific in the past 3 years. So certainly you can see where the 6.3 billion momentum has occurred from a time perspective, but also in terms of scale versus previous quarters. The good news is that mean average value of all disclosed deals, and we talk about disclosed deals because we do have data for undisclosed deals, but because they're undisclosed, deemed confidential, we don't report them in this particular data point. But for disclosed deals, we can certainly report that the mean average value of that deal has remained stable, about a 27 million mark for the third consecutive quarter. Take a quick look at, just I guess shifting gears slightly, but keeping the connection here. A lot of you have asked in the past, okay, what does that look like market to market? Because so far you've shown us the data as a big blob for Asia Pacific. Hopefully this chart helps you. There we're trying to show you really 3 columns of data. The first, ecosystem share, in other words, what percentage of the overall volume of startups that exist are actually located within that geography. And then parallel with that, we start showing you, of course, the total deal volume share for that particular market, and what's that total volume of deals is actually worth. So as you can see, from a total number of startups, India is slightly in the lead, closely followed by China, but you would expect that from the sheer demographics of those markets. But of course, then you look at the dollar value, you'll see India sits at about 10% of what China's deployed. So quite different gorillas. Nevertheless, certainly number one and number two in the ecosystem. Very interesting though is Singapore. So Singapore continues to maintain its position as number three. It has an 11% ecosystem share, which is round about what it was last year, and therefore does demonstrate that Singapore is able to continue punching above its weight. It does command a substantial, really, amount of the deal volume share for Asia Pacific. And we do tie that to not only Singapore's constant or continued investment in sciences, R&D sciences, but also the nature of its economy and legal framework, and make it very attractive to many startups and investors looking to springboard into other markets. All that to say that we continue to see the top 5 countries in Asia Pac representing the home of about 80% of all known startups in Asia Pac. And we expect that to stay reasonably steady going forwards. If I then look at categories, or more specifically, let's call them value propositions. In other words, what does that startup actually do? We spend a great deal of time when we look at the data of a startup at looking at its operational capabilities rather than does it do AI or does it do blockchain. We frankly don't really care at this stage of our analysis what technology enables them. We do capture that information, of course, but we're much more interested in terms of what does it actually do, what value does it actually create in the market at a patient level. So what we see from that data, if we look at it from a dollar value perspective, in other words, which value proposition, which category, and this categorization, is can be seen in greater detail at the back of its presentation. In terms, you'll find a slide that describes our full taxonomy in our database. But what you'll see there is, a description of which particular categories are attracting what dollars. So population health management, online marketplace, and medical diagnostics continue to be in the top 3 in terms of the total dollar value they're attracting. And we really see that as something that will continue into 2019. Some of it is not surprising. It does reflect the fact that the individual, the patient, the consumer is the driver of the expansion of the ecosystem within Asia Pacific, in I guess in opposition to what you're seeing in Europe or in the US, where it's much more about the payor. But I'll come back to that as to the importance of that nuance. 2 though categories that I think are really worth putting our finger on in terms of growth, and that is wellness and research. Both are new in the top 6 category for this year. They weren't there last year. Wellness, we think, is really a reflection of the growing affluence of middle class in Asia Pacific, who are increasingly looking to self-serve as it relates to their health. And then research for us is a very exciting development. There we see applications that are drug discovery related and that are clinical trial management related, gaining in pace, in scale, as well as in of course, in attracting dollars. That's exciting for us. It's a nice demonstration of how the Asia Pac innovation ecosystem is maturing. We're starting to see some really interesting value proposition bubbling, but also starting to show how the region is starting to serve itself. In other words, we're not reliant on Western economies to bring to the region innovation that deals with drug discovery, for example. So we're watching that particular category very closely. The interesting thing to note is if you then look at the same data from a volume of deal basis, although the order changes very slightly, the top 3 remain the same. So this chart is showing you the data over a series of half years. So you can see the trend from left to right, which is always very important to anyone looking at the evolution of the ecosystem. So medical diagnostics is in pole and is in the top 3 up there with health management solutions, online marketplace. Now we've spoken about that in the previous slide. Again, wellness and research are there to show you that there are new kids on the block, particularly research. As you can see, research has experienced a stratospheric or meteoric, let's say, elevation in the ranking tables. So we're watching that very closely. We think this is a very important part of analysis because we do a lot of work with industry, and industry is permanently looking for an understanding of maturity of startup, of capability of startup, much more so than, say, valuation of a startup. So we spend a lot of time understanding the detail of the ventures that we have captured in our database, and there's more information on the database at the back of this presentation. Okay, conscious of time, this is a particularly important chart for investors in contrast to the one I showed you before. It's showing obviously the life cycle of investment in health tech in Asia Pac. As you will note from previous comments I made in this webinar, that the angel and seed level of investment, which is really the early stage of investment, has seen an increase in median funding. So that's really an interesting development in terms of the maturity or the maturing of that level of the pipeline as we see it starting to move from the left of that funnel, if you remember, to the right hand side of that funnel. More noteworthy, I guess, is what's happening at pre-A, Series A, and Series B level, where we see the median funding levels dropping. Now, we don't think that's alarming. We purely think that that is triggered by a growing deal activity at those stages in non-China markets. Now, what does that mean? That means that generally the deal size in non-China markets are smaller, and therefore, as their volume grows, we see median funding declines as it has, as we demonstrate in this chart. So it's good news. It's a demonstration that not just China has a healthy ecosystem, and the fact that the rest of Asia, including India, is maturing. Okay, let's have a quick step into those key markets to give you a snapshot. As I say quick because we don't have enough time to go into them in detail, but for each of these charts, you will see far more detail in the full report, which again is available for free download from our website. This is China. China, looking at it similarly to the very first chart you saw for Asia Pacific, clearly showing that China is delivering or has received $5.3 billion of investment, which versus the 6.3 for the region does just show you just how important China is to the entire Asia Pac HealthTech ecosystem in terms of deal volume as well as deal value deployed. But good to see also how it's growing from year on year. I think it's roughly 2.5 times what it was in 2015. So it has grown substantially in the last 3 years. Cumulative deal value in China since 2016, in other words, the last 3 years, is 11.6 billion. So a substantial amount of funding is being deployed there. Now we'll come back to that because we think that that will not go away, but we think that might cause some problematic issues down the road. But I will revisit that point. If we look at India very quickly, now India is less of a bright star, although it has in our calculations, a higher volume of startups. It is seeing a smaller volume of deals being struck than in China, but it also is seeing less dollars being deployed. In fact, 550 million, roughly speaking, 10% of what China's seen deployed. But the silver lining is that it means that India has crossed the $500 million mark of investment, and that's its largest total in history for health tech in India. It also saw its very first mega deal, so CureFit, $120 million mega deal. There is far more detail about CureFit in the full version of the report, so I would encourage you to download it and have a look at that data. Cumulatively, India has crossed the $1 billion mark at 1.1, so that's very exciting from their perspective. And we expect, or we hope, certainly, that India will continue on its trajectory. Currently, of course, it leaves it very clearly ranked as number 2 in Asia Pac HealthTech ecosystem for total funding value. So we are watching India very closely. Least but not least, or least but not last, sorry, we're looking at rest of Asia. There we're trying to show you 17 and 2018. And we're trying to show you some of the key markets of that region, recognizing that not all of them are listed. That's largely because their volume share of deal is quite a bit smaller. By deal volume share, Singapore has overtaken both Japan and South Korea, sitting at about 30%. So that's pretty much in line with what I was describing to you with respect to Singapore's ecosystem share and attractiveness to investors and industry innovation leaders. However, we have seen 12 distinct rest of Asia countries recording funding deals in 2018, including for the very first time Myanmar. So Myanmar comes of age, and we see HealthTech deals, or a HealthTech deal certainly of a small one, but it's one that it was recorded. And we're very excited to welcome the founder of that Myanmar venture to our summit in 2018, last November. Those of you who were there no doubt met the founder. Noteworthy markets, or ones that are on our watch list in the rest of Asia, are Indonesia, Malaysia, and the Philippines. Now, it's very centric to Southeast Asia, I recognize that, but I was just trying to differentiate those from the very first three that I showed you at the beginning. In other words, Japan and South Korea are continuously on our radar, particularly Japan. Okay, I'm conscious of time, therefore I won't dwell any longer in relation to the actual key data. As I said, much more detail available in the full version of the report. So again, I encourage you to download that. Let's have a quick look at drivers. Very first driver is one that there's a series of drivers that we believe are indicative of why we see the momentum we have seen in 2018 and why we expect that momentum to continue into 2019. First one is the one I've already mentioned, and that is that we see growth stage investors continue to be attracted to HealthTech solutions in Asia Pacific. And that's, if you look at that bar chart, which is 100% bar chart, as you move towards the right during the course of 17 and 18, you'll see that growth stage deals, so that's Series B, Series A, Series B, Series C, are growing in total share of deals. And that's encouraging. It's certainly a very testament of a maturing ecosystem, and one that we expect to see continue. Second driver will be strategic corporate activity. The last 18 months have seen a substantial growth in focus and involvement from large corporates of many verticals, not just pharmaco, although I do recognize a few of the names up there are pharmacos. And that's a substantial shift. About 18 months ago, you asked me what I'd seen by way of commercial partnerships between startup ventures and large corporates. I would be struggling to come up with more than 2 or 3 insurance marketing deals. And I can just see here Raimondo giggling already. The couple of noteworthy there are Mundi Pharma, which is a regional pharmaco tying up with Bioformi, which is a Singapore very promising startup, currently in the US, concluding his FDA approval. They're focused on patients and patients suffering from pain. We're seeing Healint, another Singapore-born startup focused on migraine, striking a deal or partnership, with Teva, which is an Israeli global pharmaco. Healint has a number of other deals out there. We're seeing Roche stepping in with Wealthy, an Indian venture around its diabetes portfolio. So very exciting to see Roche step back into India. It's been a while since they've been that active in that market. And then, of course, if you look at the non-incumbents, we can talk about Medopad, which is a UK HealthTech startup stepping into China in partnership with Ping An Good Doctor and Tencent. And conversely, Ping An Good Doctor stepping out of China into the region through a tie-up with Grab. For those of you not familiar with Grab, it's a ride-sharing app, or ride-hailing app, I guess. So very exciting, and there are many more. This is just a sample. As I say, it's not exhaustive, but we expect that to be a continued driver or engine, let's say, of momentum in the space in 2019. Worth talking about, and I guess it's usually a question that comes up from most industry leaders as well as investors, but as it relates to what's the government's attitude and position in relation to this level of innovation or disruption in the healthcare space. Some data points. So if you look at Singapore, Singapore's Ministry of Health has launched as a regulatory sandbox. They're currently focused on telehealth regulations, and they're working very closely with 8 telehealth startups that they've selected. And there they're working, of course, in trying to create a safe environment to define the operational viability of telehealth, and more importantly, to set up, to convert, I guess, their guidelines into regulations. Similarly, in China has, as I said before, recognized that technologies can play a fundamental role in transforming the delivery of healthcare, particularly at primary care level. And they, in April last year, produced a very comprehensive set of guidelines that they've called Internet Plus Medicine. These are well worth a read, as they're likely to be a bit of a precedent for other markets. But you can clearly see that the Chinese government is placing a bet on health tech, and is certainly actively driving the transformation of healthcare through technology, which is why I think we're seeing some of the sizes of deals that we're seeing in China and the confidence we're seeing in the market. Conversely, though, you're seeing India slowly coming to the party. So 2 things worth knowing about India, or certainly 2 data points. One is the fact that the Minister of Health has started to bring out regulations in relation to drug e-pharmacy. So in other words, script fulfillment online, which is certainly very interesting in relation to seeing India taking a lead there. And I say that because 2 things. One, China hasn't taken a similar lead. They very much so far have left that a bit slightly broad. That's why we're seeing various prescription drugs for sale on online websites such as Alibaba and JD.com, which is illegal, but no one seems to be policing it. But equally, of course, we're seeing that as a reaction in India to the private sector of pharmacy players. But for India, we're confident because what is now affectionately known as Modi Care, in other words, a rollout of universal healthcare in India to about 500 million Indians, will only be achievable through the adept use of technology. So that's why we're confident India will continue to grow. Looking at sentiment in the market, we spend a lot of time talking to industry leaders as well as to investors. So we regularly ask them what their points of view and thoughts are. We spent a bit of time towards the end of 2018 asking those questions you see in front of you. So we asked industry what the importance of health tech was to their vertical, and you can see that the response was either very high or overwhelmingly very high or high. We also asked them what their thought was around their organization in terms of level of interest as well as readiness, or are they set up to engage? Most of them felt that their organization was very interested. However, of course, there was a bit of a 50-50 almost debate or disagreement in relation to how ready they were to actually engage successfully. But we see that changing going forward as they are learning, they are investing, they are experimenting. The bullishness of organizations is quite strong. As you can see, similar-ish pattern to the level of interest. But we were very encouraged by their overreaction to the fact that they are certainly keen to build more partnerships in 2019 versus 2018. So again, we see that as a very big engine to the scaling of its ecosystem going forwards in 2019 and beyond. If we look at similar questions for investors, again, a very key ingredient, core ingredient of this ecosystem. We asked investors the same question: what's the importance of health tech to you and your investment portfolio, investment mandate? And as you can see, the overwhelming, resounding, very high. How interested were their organizations? On the whole, very much geared towards highly interested. We then asked them whether they felt 2018 had been a great year for health tech in Asia. As you can see, most of them felt very positive. And then, of course, we asked them how that translated in terms of their bullishness in 2019 and what's they likely to invest. As you can see, very bullish and more than likely to be investing. So all of those things are core drivers of 2018, but are also clearly shining a light on the fact that 2019 will be a strong year for health tech in Asia Pac. In fact, I've heard it said that health tech is the new fintech. We shall see whether that turns out to be the case in 2019 and beyond. Okay, few minutes, if I may, before I hand over to questions, to look at predictions. I'll keep these short. Essentially, I think you've got the sense of our prediction from some of my bullish language throughout this webinar so far. But we do strongly believe that Asia Pac's health tech ecosystem momentum will continue. And then we will be driven by some of the key drivers that I've just illustrated to you in the last few slides. So in terms of predictions, as I said at the very, very beginning of this webinar, we are of the opinion that health tech is maturing into a horizontal discipline rather than just something that's owned by one vertical. Now, it's good news in terms of the fact that the momentum, the evolution, the innovation is being driven by a number of industries and sectors. It also does mean that it's a major transformation that's underway, which of course brings with itself its own constraints and challenges. Asia Pac is clearly on the ascendancy and will continue to be led by China. It's quite obvious to all of us that will continue. But I think as you saw from some of the data I shared with you, that it is growing sensibly. It is in no way an ecosystem I would describe as bubbly or frothy. From a value proposition, a category perspective, we believe that wellness, online marketplace, and population health will continue to grab the greatest share of funding, dollar funding. But, and this is interesting, but research, which I talked about, in other words, clinical trial application or drug discovery application of data and analytics, for example, will continue to feature very strongly in value propositions that are growing. And the one that I did not mention earlier on, simply because it's not a single category, it's more of a cross category, is real world evidence. In other words, the ability to pool data, various sources, for example, hospitals, and to start driving insights from those for either at a government level for better resource planning or at a drug firm level for better market access, for example, in other words, proving the efficacy of a product. So that's, for us, is another really interesting development. And we have certainly seen in the last few months, the last 6 to 9 months, a very strong appetite from both pharmaco, medical device companies, as well as investors for this cross category we call real world evidence, RWE. Looking at headwinds though, we would be foolish not to look at some of those. I mentioned this before, but it would seem, judging by the volatilities in markets over the last few days since the 1st of January, that the geopolitical uncertainty that we witnessed in 2018 will appear to remain with us as we go forward, certainly in the short term. And so the impact that had on, say, for example, in China, the Baby Tree IPO, which ended up pricing itself substantially lower than its initial offering, I think we'll start seeing some continued jitters in some markets. Talking about China, this will remain dominant going forwards. It already is substantially dominant, but it will remain that way. And will remain that way for a number of reasons, really, but none other than really the fact that the government in China is pushing its ambitious Made in China 2025 agenda, and therefore is putting in place some of the pillars required to grow innovation within the market. There is a reputed or reported $850 billion of funding yet to be deployed in China. Now that's exciting news if you're in China as a venture owner, founder. But from our perspective, that raises a couple of eyebrows. And really, what does that mean for the quality of some of these deals if all that funding suddenly needs to be deployed in China? Now, could it be deployed elsewhere? I think the US is looking increasingly unlikely in view of the reaction of the US to investments and acquisitions from China in the US. And so is there a silver lining for the rest of Asia and India, whereby we will see China funding starting to push out into other areas of Asia Pac? Who knows, but that will certainly be welcome. Finally, in India's perspective, really a contrarian country, really, in a number of ways. We talked about some of the regulation advances, but there are some concerns of taxation in India. There is an angel tax, as it's called, which has reared its ugly head again at the end of last year. And although the government's claimed or assured that it will be amended, we've not seen any of that yet. And I think that's starting to concern certainly the early stage investment stages of investment in India. Okay, conscious of time. So for any further information that you guys are wanting to access, please visit these links as they're listed on this slide deck, including downloading the full version of the report and digesting that in your own time. So from a question perspective, as I said, very keen to ensure that we answer the questions that you've started to put on the question system. And hopefully we've had a chance to answer some of these as we've been going along. Let me see how I can make that work. So first question then, Mirat. Question says, let me just click the right button first. So Mirat, the question says, are you seeing US and EU digital health companies entering Asia? MedPad is one small example, I suppose. And do you expect there to be globalization, or is the trend towards balkanization of product services delivering digital health? It's a long, complex question, Mirat, but thank you for that. Yes, we do see a little bit more of that. Of course, the other big deal that we saw come from west to east was Babylon, which not only signed a deal in China, but also signed a global deal with Prudential, I believe. So we'll see more of that going forwards. That said, I think we as Galen Growth Asia have seen a number of, a small number, but we've seen a number of Western, let's say, US, EU health tech companies starting to explore. But I think the wise ones rapidly discover that they can't just simply plug and play their success story from the US into Asia and end up with the same result. In fact, one of our neighbors in our co-working space is 7X, which is a US health tech startup, which is exactly trying that now by establishing their Asia Pac offices in Singapore. So the short answer to your question is yes, we'll continue seeing that trend, but we hope that the hunger for dollar investment by the startup doesn't push them into accelerating strategic decisions, and then that is the first warning really for any venture looking Asia Pac is that it's very different over here, and therefore the question I do ask myself, for example, is that Babylon signing a global deal with Prudential is certainly a great intent. It will be interesting to see how they deploy such a business model in each of the markets that they are trading. In terms of the second half of your question, do we expect globalization or tend towards balkanization, product services? I think in Asia Pac we'll continue to see balkanization, to use your term, as startups continue to very much specialize and focus on their immediate market or markets. But I am of the opinion that we're starting to see quite a lot of fragmentation, and therefore at some stage we'll start seeing I guess consolidation going on, or certainly a winner takes all in terms of the largest players running away with the share as they become, I guess, the gold standard for that market. But let's wait and see. I think it's a little too soon to be placing a verdict on that, but it's a very interesting question. Thank you very much. Okay, looking at the other questions. Is research segment growth driven by regulatory requirements in AV countries or by R&D needs? It's an interesting point, that question. Thank you. I'm not sure who asked it, but I was just being passed a piece of paper because my screen is not responding at the moment. I would say that it's less about government, although there are some policies that are coming through. So I would say that Japan, for example, and Australia, Korea, are starting to, governments are starting to drive expectation as far as real world evidence or as far as research is concerned. That said, most of the momentum, I think, is really coming from two things. I think one, a recognition that physiology and biology, therefore data points, are very much localized and therefore more required than just rolling out data points from the US, for example. And the other, of course, is sheer innovation. I think a number of innovators in this part of the world are recognizing the fact that there is a clear opportunity for them to make a difference. A classic case, and I guess you're familiar with that, is really genomic databases. Most genomic players sitting in Europe or in the US are unable to trade in Asia Pacific simply because they don't have the appropriate databases to provide insights as to the sequence of or data genomic sequence of a specific individual in Asia Pacific. And so the local or the regional players are able to fill that gap. But that's just, I guess, a loose high-level answer to your question. I hope that helps. But we're watching that particular value proposition category very closely in order to better understand it, and to better understand it in the key markets that I was talking about earlier on today. Another open question. So, Alfred, thanks for your question. Is there any areas you feel facing market saturation? No, let me just click the right button. Alfred, no, I don't believe there is yet. I think it's too soon for that. There are some categories that I think have lost a little bit of steam versus others. If you look at the last 2, 3, 4 years maybe of evolution, one would be telehealth. I think we started very strong in telehealth in this region, and over the last year or so, we started to see a plateauing, I guess, of hunger for telehealth type platforms. As to be honest, health tech platforms and innovation become more sophisticated in this region, they are starting to pull the smart dollar back towards them. But thanks for the question. What is my view on digital therapeutics adoption in APAC? Okay, interesting question. It's a bit of a broad term, digital therapeutics. I find also some people claiming various definitions for it. I think my long-term view is that it's very similar to the one we are seeing expressed in Europe or in the US. It clearly plays a role, and will play a role both at patient level as we continue to understand the importance of owning our own health, as well as a reimburser or payor level, as we start driving towards other types or other manners of addressing disease or treating disease. It's early days yet. I think we've seen 2 or 3 value propositions that have merit, but on the whole, there's greater requirement as far as evidence or clinical evidence that these digital therapeutics are making a substantial difference. And a lot of that will come from having sufficient data. So we need to give them time to grow scale, to build data pools, and to be able to demonstrate through insights really they're making a difference. It's the usual clinical evidence required. Okay, thank you for the questions. We're almost on the hour, so we're almost really out of time, but just checking whether I have or we have managed to answer all of your questions. It looks like it in relation to the technology. So if there are no last questions or thoughts from anyone on this call, I'll just give it a few seconds, give a chance somebody to type something or put their hand up. Sorry. I see Raimondo was particularly interested in dinner. Thanks, Raimondo. That was delicious. Okay, looks like no further questions. Oh, hang on, something's popped up. Let's have a quick look. Mirat, thanks, Mirat, for your comments. Very kind of you. Okay, listen, let's call it a day. As I said, within 24 hours, we'll have the recording to you, and we'll have these slides to you. But if you want to get ahead of the game, I suggest you go to our website, download a full report, and digest that in your own time. But meanwhile, thank you very much for your time. Thank you for your questions, and look forward to connecting with you during the course of 2019. Bye.